Hello dear traders, I'm pleased to share another market review prepared for InstaForex. Today is the crucial day for those market players who trade the US dollar. They are anticipating the US Consumer Price Index for November. The Fed's comments will follow this data of major importance. On the back of soaring inflation, the US Fed is likely to turn to aggressive monetary tightening with bigger monthly reductions in its bond buying. Besides, a few months are left before the first rate hike that could happen in the summer next year. Ahead of this report, the market is trading quietly. What's going on in financial markets? Gold has come under pressure. Bitcoin has failed to break the psychological level of 50,000 and slipped below. Other digital tokens are making a downward correction, and besides, the S&P 500 is stalling its rally. I guess it's a minor correction. Now let's discuss market moves in detail. Gold is trading under pressure. It is drifting downwards. The outlook is mixed. On the lower side, there are good targets at near 1,760 and 1,757. Depending on the inflation data, the price could break either upwards or downwards. Then the price is likely to move in the opposite direction. Meanwhile, gold is trading sideways. It doesn't make sense to enter the market. We should wait for the direction of a breakout. If gold breaks the upper border, we could aim for lower targets. If gold penetrates the lower border, we could catch long positions. So we will be able to aim for higher targets and enter the market at a retracement. These are my general plans before the actual events. All in all, we are waiting for the direction of a breakout and market response. I cannot say anything definite. Silver is putting pressure on its one-year lows. I think that the price will break the lower of the year. Here is my scenario: a fake breakout, an impulse, and a further climb. Everyone is trying to puzzle out how to trade the euro-dollar pair. Yesterday, it was a good idea to open long positions from a 50% Fibonacci level. Americans were not buying the currency pair. Yesterday, Americans were betting on the US dollar strength because traders are anticipating high inflation data. So anyway, I see an impulse, a retracement from a 50% Fibonacci level. We could set a stop loss slightly above the low and take profit upwards. Considering what I'm watching now, the euro-dollar pair is expected to trade higher with a stop loss at near 1.1285. There is a slim chance that the price will update a low, but I see a strong impulse that could be followed by a retracement and then a further growth. Generally, macroeconomic news could be unpredictable. In case the low is updated out, stop loss will be triggered. Personally, I would work out this bullish trading plan on a demo account. The day before yesterday was bullish. Yesterday the market was bearish. This is called engulfing on the daily chart. It is not good for long positions. Well, we can place a good clear stop loss, so we could try. What's going on with the pound sterling? Today the UK released very weak GDP data, though the pound did not react to it. The US dollar is setting the tone for the pound-dollar pair. The same is true about the euro-dollar pair. Looking at the chart, it is obvious that traders are betting on the greenback. There is a proverb: buy the rumor, sell the fact. Market sentiment will settle later today. The sterling is not setting any signals for a trend reversal. I see pin bars on the chart. The pair is making soft moves. Commonly, drifting moves are interrupted by sharp price swings. Let's wait and see what will happen. The inflation data will be the market catalyst, so traders will revise their positions. That's all for today. See you next week. Bye-bye.